Hey, what's up? It's Ben here. So today I want to show you guys how I personally trade dividend stocks on my Robinhood account. And surprise, surprise, this is not my Webull account. This is just another account that I have to trade and invest in stocks in. Without further ado, I'm going to just jump straight onto it. And if you're new here, make sure to subscribe to learn a little bit more tips about this and also to watch my tutorials on how to trade stocks in general. Or, if you just want to be here and watch my account blow up for entertainment purposes, by all means, you feel free to do so. And by the way, this is not financial advice at all. This is just my personal experience. So when I first started out, I didn't know any about dividend stocks until I read books on it and watched videos on it as well. But for newbies here like me, or way back then, what I do is just go to dogsofthedow.com. And by the way, it looks like this. The website is super outdated. What I want to do is scroll down over here and click on Dows of the 2023 Dows of the Dog. So right now it's 2023. I don't know if you're going to watch this later on in the future, but if you do, just click on that and scroll down. You want to find performance table year to date. So currently, if you bring year to date and notice all the ads that pops up, you'll get, the top, the stocks that builds up the Dow Jones. So basically, the Dow Jones is a little index that's really outdated, and they don't really use this anymore to predict, the market. So Dow Jones have, small dogs and, there's big dogs. The small dogs are basically the small companies in the Dow Jones. So currently, right now, I want to pick stocks that have high dividend yields. So if I were to shuffle this, actually it's already shuffled. You see Verizon on top with a dividend yields of 6.39%, which is really good. And by the way, these prices are 1 day behind. So these are right now currently is January 18th and the prices are January 17th. So these are a little bit dated, but the yield is almost the same, besides the fact that the changing rates for today. So the yield is 6.39. So I want to find something with a high dividend yield, but also at the same time that has the stock price is on the lower end. So because when you pick a stock price that's on the lower end, it has a more likelihood of jumping up a little bit higher. From my personal experience, by the way, has a more likelihood of jumping higher with a higher percentage gain. So this is just my personal experience. I know a bunch of financial gurus or financial investors will say something about that. That's not good investing at all, but this is just my experience, by the way. So I want something high dividend yield. So right now I could see that Verizon is one, Walgreens is one right over here, Intel is one, and Dow is one. This is not the Dow Jones. This is just another company. And the price is relatively low. So I want to pick these four right over here, and I'm going to just choose another one. And I'm scrolling down right over here. I see Cisco right over here. So $47.64. And it's considered a small dog, which is basically a small company within the Dow Jones index. So right over here, I'm going to just choose these 1, 2, 3, 4, 5. And if I average these yields out, it comes out to be like 4. I want to say it looks like it's a 4.9% on average. If I do my calculation right, I'm just doing it on my head and just looking at the numbers, by the way. And I'm going to just go ahead and actually go ahead to Robinhood and buy them, because this is basically all my research done. And by the way, don't even do this if you don't know what you're doing. I just do this because I have a track record of getting a percentage gain, and I'll show you my exit strategy on why I do this trade. Why. So I'm going to go ahead on Robinhood, and I'm going to just type in search what I have, Verizon. So Verizon is just VE for the ticker. And I'm going to just clear this out. So I'm on this order menu right over here. Basically, I'm going to buy in shares. Stock market, let me see, the price is 40. I think 25 shares will equivalent to $1,000. So for each of these stocks, I'm going to be investing $1,000 into it. So my buying power is 95. Oh, I wasn't supposed to show you this, but the buying power is just the power that I have. It's not really the actual physical money that I have. It's just my purchase power, and this is on margin, by the way. So this is relatively low if I have the actual money in my account. So shares 25, and estimate cost is about $1,000. So I'm going to just go ahead and place an order on this, review my order, and then you could read this if you want, and then hit buy, and then hit done, and voila, I just purchased $1,000 worth of shares in Verizon. So that comes up with the average cost of $40.06. And by the way, I'm just using market order just so it executes faster. So, and then I'm going to go ahead, and the next stock that I see here on this list is Walgreens, WBA. So ticker symbol is WBA. And then how many shares I'm going to purchase? I'm going to be purchasing around 28 shares. Let's say 28 shares. Does it come out to be 29 shares? Yeah, around $1,000 for those for the market price. Review order. And then hit buy. Hit done. Right now, market value is $1,027 ish. And then I hit. Next one is Intel. And then let's see, I'm gonna get 35 shares of this, about $1,000. Purchase that. Good to go. Hit done. Next one is Dow, DOW. Remember, and this was low. This is low price per share. And I'm gonna type in 18. I think 18 will be 1,000, around that 1,000. Yes. Place my order and hit buy. And there you go. I just bought $1,000 worth of it. Let me see if this page is going to refresh. Okay, there we go. Right over here. And the next one is Cisco. Hit that. And then buy 21 shares of that. Let's see, that's about 1,000. I'm going to place my order. Hit buy. Cisco purchase. So there you go. That's how I bought my shares, and average out the dividend yield will be about like 4.9-ish% if I want to say, if I were to average it out. So here's my play. If my portfolio for some reason goes down like over 10%, I'm going to go in and buy some more of these stocks because the dividend yield is still there and still sweet. But granted, if they don't cut their dividends. So if for some reason, let's say Intel or Dow is dropping significantly, but my dividend yields will start increasing. Granted, if they don't cut their dividend, I'm going in and buying more Dow or Intel or whatever it is. But if they don't, let's say hypothetically speaking, in a perfect world, if they don't go down and if they were to shoot up another 10% next year, I'm going to be selling some of them to reap some of my gains, right? And by the way, if you hold a stock longer than a year, you have better tax advantage. If you're doing short-term capital gains, it's going to be taxed at your tax bracket. So talk to your CPA, talk to your accountant about this. And by the way, so average out so let's say 4.9%, right? If I don't do anything and I'm just buying stocks, I'm getting 4.9%, almost 5% just in dividend yields. And if I were to sell, I'm making money on these. And by the way, let's say hypothetically speaking, if Dow is DOW, if Dow shoots up to $80 per share, right? I'm going to be selling this and I'm buying something to replace it. Let's say Coca-Cola was at $63 per share. I'm going to be buying Coca-Cola in exchange of Dow. So then I reap the benefits of the gains, right? So basically, I'm going to be cashing out on Dow and replacing it with Coca-Cola. Granted, the dividend yield isn't so sweet, but I'm thinking that the price movement of this lower stock will shoot up a little bit higher than my other stocks. And let's say if Verizon were to drop down to $30 for next year, I'm not going to be selling, because if I don't sell, then I don't lose money. If I sell at $30, then I'll be losing money. So for now, that's my exit strategy, and I've been doing this for a couple of years now. You could check out my other videos that I have way backdated in 2020, I believe, but I'll link that video down below. For that video, you'll notice that some of the stocks I still have, I'm just holding on to it and I'm just collecting dividends off of it, which is pretty good. But if you hold it all over, course of 10 years in the long run, you're definitely going to be making some money. And by the way, something companies like this on the Dow Jones tend to be strong, stable company. If they're not, they're usually be kicked out of Dow Jones. And if they do get kicked out of Dow Jones, there's multiple companies that have been kicked out of Dow Jones in the past. And if they do so, I'm just selling them and then replacing it with another company that's in this list. So that's kind of my strategy of what I do. By all means, don't take this and just run with it. Do your research first. If you want to check out the dividends more in depth, dividends.com. Just pull this up. Dividend.com. Right over here. Dividend.com, right over here. Just type in your dividend, let's say Verizon, and you'll have a better understanding of the dividends itself. So payout ratio 52%, which is good for a company. That means that they're not, paying out way too much to their investors, and they're using the money for within the company. They pay quarterly. Average communication company has 2.62%. You can see that if you scroll down, you can see actually the dividends payout right over here, declaration dividends date. So if you want your dividends, make sure to buy before this ex-dividend date, and then it'll show you the payout day as well. So this is 2023 right over here. So for Verizon, their payout date is in February. But you have to buy it before January 9th right over here. So there you have it. If you have any questions, feel free to drop a comment down below. And don't forget to, if you haven't already, sign up with Webull or Robinhood. And Webull still giving out free stocks. I don't know about Robinhood, but I'll post links down below if you're interested. So I'll catch you all next week, actually. And Happy New Year's.